Okay, good afternoon. So we'll start today. I have already given you uh, a question paper, what we have discussed last time. Uh, um, Basically, so we try to do one or two questions today first, and then we move into today's topic, right? Okay, so can you take that the model question paper? Uh, right? Okay, so are you ready? Okay, take the model question paper which I gave you last with this note. Okay, right. So first, take the first question. Now you know the question is usually consist of MCQ and a short answer, which for first question, which cover 20 marks. So as I told you earlier, and it is an if you can score more than over 10 or maybe 12, 14 from the first question, definitely you are going to pass the exams, right? Okay, we'll take the first question. I think it's with you, right? I'm not going to put into the board, right? But it's with you. Parate execution is not applicable for. Parate execution is not applicable for. What is the answer? A, B, C, D. Right? Can you just put me some answers, please? Right? So can you answer to this? Parate execution is not applicable for A, all defaulted loan in excess of rupees 5 million. This covers under Debt Recovery Act number 1990 and number 4. It covers debtors' property and it covers third-party property. Remember, it is not applicable. What may be the correct answer? I think we have discussed this area. So can you remember the case? Case I will call it Chellaya Ramachandran versus HNB, right? That's a case. What's the answer for the first question, right? We will do first 5 questions today, and we'll go for a one loan question, right? And then we will likewise we continue next week the balance, right? Okay, what may be the first answer? Can anyone tell me? Switch on your unmute your mic, or maybe putting to the chat. What may be the correct answer for the first question? Parate execution is not applicable for. Any answers? You can you can just put A, B, C, D. Huh? Right. Right. Some of you have given the answer. The answer is it covers third-party property. So guarantor's property is not applicable under the Parate execution. And a famous case called Chellaya Ramachandran versus NSB, right? So that question is more or less coming in your low class, right? Okay, now question number 2. Section 77 of Banking Act of 1988 and a Banking Act Directions number 8 of 2011 covers 2 main areas of fair banking practices. How do you commonly call on these 2 areas? Right now, one section 77 of Section 77 of Banking Act 1988 and one Bank Act Directions 8 of 2011 covers 2 main areas of fair banking practices. How do you commonly call on these 2 areas? So if you are going to join the bank, you have to oblige these 2 rules. What's commonly called? Can anyone give me the answer? These are things we have learned. Now, in details we have learned. What may be the correct answer? Mohammed, what is the correct answer? You can unmute and tell me. Mohammed? Huh? No answer. Huh? Any guesses? You know these two answers for this. One is basically Section 77 of the Banking Act 1988 talk about what customer secrecy or confidentiality. Right? The first one is customer secrecy or confidentiality. What is the other one? That is what you call customer charter. That is customer charter. So I need your support, otherwise it's difficult to continue all this, no? Right? Okay. Answer is first one is confidentiality. The second one is customer charter. Right. So the third question, the third MCQ, what is the most, please refer your note, I have already emailed to you. What is the most risk financial product out of following? What is the most risk financial product out of following? One is asset-backed securities, commercial paper, debenture, unit trust. Right? What may be the most risk product, financial product to a customer's point of view? Right? Out of all these four, you know, the commercial paper is a money market instrument and it is a short-term product. And debenture, also a capital market instrument, more than 1 year. The unit trust, also a capital market instrument, more than 1 year. Asset-backed securities also may be considered as money market as well as a capital market. But what the question is asking, what is the most risk financial product? Right? The answer is, what's the answer? Answer is A, that is asset-backed securities. Why? We are going to sell receivables to the customers. Is more risky product out of all. Right? Okay. So then question number 4, on the first question, pension plans, annuity products that would help manage the certain risk of customers. How you call that risk? Anybody can tell me what is that risk called? How you call that risk? That risk is called the guy who is living more than beyond the normal life expectancy is called that risk. That risk is we call longevity risk. Longevity, longevity risk. They're all things we have done, right? Longevity risk. Okay, doesn't matter. Right, the fifth one, the short one, pension plans, annuity products that would help manage the certain risk of customers. How you call that risk? Sorry, that's the answer, right? And the fifth one, both depositors and banks tend to take more risk, expecting a financial loss cover from the deposit insurance scheme. Right? How do you call that causes in such a deposit scheme? Right? That's only disadvantage of deposit insurance scheme, that the answer is called moral hazard. M-O-R-A-L-Z-A-R-A-D. Moral hazard. Right. Okay. Now I just give you some food for thought. Right. Okay. Then remember. Next week, now I'll give you 2 questions. Please try to answer and keep it with your answer. Right. I will discuss the answer. I will be test you on. We will discuss question number 2. Question number 2. Question number 2, and maybe we talk about question number 3, 2 and 3, right? Okay, we try to answer next Sunday, question number 2 and 3, and that already emailed, the question paper is already emailed with you. Try to answer question number 2 and 3. So keep it ready. I will discuss the answers at the next Sunday. Okay, right. Now, so we will move into today's topic, right? So I just give you but your cooperation is very weak. No, you have to actively participate with me, right? So that's what you are promised me. So therefore I gave you a question paper along with this tude last Sunday. So try to answer. If you give me answers only, I can go for more model papers like this, right? Okay, doesn't matter because of the first day. From next Sunday, you try to answer question number 2 and question number 3, right? And keep the answers with you. Then I will discuss those answers, right? Those answers I will discuss with you, and then you can check whether your answers are correct or wrong, right? Or maybe you can add something. Okay, so now, so we are moving to today, the new area, we are continuing from customer protection. So the topic today is called prudent risk management of financial institution is the best method of customer protections and relationship. There are so many things we discuss. There are so many risks, so many laws and practices. We discuss how we are going to protect customers, how we are going to protect the financial institution, how we are going to protect the financial system stability, and not to use a financial system by customers to do unwanted illegal activities. So that we have discussed. And now we are going to look at it a different angle, right? Okay, let's look at it. The first one. You know, in financial institution, usually face four type of risk. So I think you may aware now that usually financial institutions are facing 4 main type of risk. What are those risks? We call credit risk, right? Credit risk. The second risk is what you call the liquidity risk. The most important risk, the customer's point of view, they will look at it, the bank's liquidity position, nothing else. And the third one, market risk. And the fourth one, operational risk. Right? So let me try to understand now, right? So what are those type of risks? So risk is you cannot totally eliminate it. Risk only can be controlled or mitigate, right? So these risks can be come due to internal reasons or maybe external reasons, right? Some risk can be suddenly come, some risk may be there for longer time, and it's become a difficult to control sometimes, right? Okay, now we have all banks, you know, have a separate divisions called risk management division, and there is a person called, all banks according to the central bank, you must have a person called chief risk officer or chief risk manager or whoever in the hierarchy top level, right? So all banks must have a separate risk management division, and remember there is a person called chief risk officer, and They are the people who monitor, manage, and measure the risk. So the risk management is an duty and oversee of who? Board of directors, right? You're going to learn all these once you go for DABF. We discuss about the corporate governance and all. So there we will discuss the object of the duties of a board of directors. One duty or one responsibility of the board of director is and ensure that your bank is having a proper risk management framework, right? Okay, so in order to manage some risks, what I mentioned earlier, various financial products, insurance policies, but some products we have discussed are available for bank, right? Okay, now let's look at it. What are those type of risks, right? First, we'll take liquidity risk. First, we'll take the liquidity risk. Now, what is simply liquidity risk mean is the risk of non-availability of funds to meet ongoing financial obligation faced by the financial institution. That is we call liquidity risk. Right now, say for an example, the customer who deposit the money in your bank and want to withdraw money. So your bank say we don't have a money. So that means, so your bank facing a liquidity problem, right? Okay, right. So liquidity risk is the risk of non-availability of funds to meet on ongoing financial obligation, right? And the next one, within the same one, we call insolvency. Now, how bank facing was insolvency, right? And it is the bankruptcy. Now, bank is going to bankrupt due to erosion of capital, right? If you don't have a much capital, right? And that means your liability is exceeding your realizable assets. Your liability is more than your assets. That means your organization, your bank is going to face insolvency, bunwat bhavit, bankruptcy, right? So what is insolvency? Erosions of capital. That means your capital is not enough to absorb those losses, right? So, okay, so that means basically very simply called liabilities exceeding realizable assets. That is called insolvency, right? Okay, then we look at it another risk we call operational risk. Now, the risk of monitoring resulting from main reasons. One, because of lack of internal process or internal controls of your organization, poor internal controls within your organization. That the operational risk may be due to people. People mean employees like you, right? And also due to some system failure, your IT systems or whatever systems failure, you're going to face in operational. And also due to an external events, maybe flood. Now, even for this what you call COVID-19, that's because of an external event. So because of that, you have to close your operation, right? So operational risk arising due to four reasons. One, maybe poor internal processes or internal control system your organization, right? Maybe due to you, the people, that mean your employees, some negligence, and the systems, maybe IT system failure, or maybe due to external events like earthquakes or flood, drought or whatever. So it's not facilitated to carry out your operation. It's called operational risk. And the last risk we call them as, third risk we call them as the market risk. The risk movement in the price functions of financial instruments. It may be due to few reasons. Market risk can be combined with changes in the pricing, right? Now, say for an example, I can quote you. Now, customers comes and pawn your pawning articles with you. You gave some advances to them, right? So the price of the gold in the market has come down. People not come and so may settle, you know. Why? Because they have taken the loan more than the value of the gold price, more than the gold article. So therefore, bank has to face the market risk because of the price fluctuation in the gold market. Understood? Right. Likewise. Or maybe due to policy. Now, due to the what you call the interest rate, that is why these days the lending interests are coming down, the deposit interests are coming down, and that may be some problem. That is why the banks are requesting for customers to charge floating interest rate, right? You know what do you mean by the floating interest rate? We have discussed. And the next one about the market risk is exchange rate risk. Due to the exchange rate fluctuations, so bank may need to face risk. That risk we call market risk. Or maybe due to some financial instruments like stock, right? The stock prices are going up and coming down. And that also comes under market risk. So therefore, the market risk comes due to the interest rate fluctuations, due to price of the articles, some articles, price of the stock, and also maybe due to exchange rate risk. So that's all are combined. We call them as market risk. And the last risk we call them as a credit risk. Now, credit risk is the default on a debt. Now, the customers or take loans from the bank, and customers not paying you the loan installment, required payment. So therefore, banks are facing credit risk. Okay, understood, right? I hope you understood. So I will repeat it again. Every bank is facing different type of risks, right? Risk cannot be totally eliminated. Risk can be only managed or controlled or mitigated. So in the banking industry, we have identified four major type risk. What are the four major types? The most important thing for customers from the bank point of view is the liquidity risk. So what do you mean by the liquidity risk? The non-availability of funds to meet ongoing financial obligation. As customer comes, you are not in a position to give the money. So that's banks is facing liquidity risk. And then insolvency means, so banks is not having enough capital. That means your liabilities is more than assets. So then the bank is facing insolvency. It's not a risk, right? It is a worse side of the liquidity, right? Okay. Then the operational risk, and that is recently introduced, identified after this financial crisis. They said the operational risk comes due to internal processes weaknesses, due to employees or the people, and due to system failure or IT systems or whatever, and or maybe due to external events. Because of that, operational risk can take place in the organization, right? We will give some example later on, right? And then what is market risk? Market risk rising due to interest rate fluctuation, due to prices of certain articles, commodities, and some stocks fluctuation and also exchange rate fluctuations. And the credit risk arises due to default or delay in payment the money taken by the borrower. Exactly. So banks are facing credit risk. These are the main type of risks. Okay. So how to mitigate those risks? Now I'm not going to touch much more on that. So there are products available with us to mitigate all these risks. Now, credit default swaps for credit risk. That means credit default swaps mean basically, so when you are give a big loans to a customer or a corporate customer especially, you are getting an insurance cover from insurance person. So you are, if something happened there, so you will cover from insurance. That is called credit default swaps, right? And the interest rate currency swap also same. If your interest rate is, you go for another interest with a different currency, right? And if one interest is going up, other interest is coming down, you can match these two products, right? Don't worry much of that. And then you have to mitigate a foreign currency risk. You have options, futures, and forward contracts, especially for market risk. And then you have a contingent credit line for liquidity risk management. That means you must have a specific source of arrangement to meet the liquidity risk, right? All these things you're going to discuss in more lengthily in your DABA, but get an idea only, I'm just telling you, right? So remember, there are some products available with financial institution or to provide to customers to mitigate some of the risks. Okay, now let's look at it this point. The risk that customers face in their transaction with financial institutions. So what are the risks you are going to face with the financial institution? Now suppose all banks, all customers are dealing with banks, right? Do some transaction with financial institution. Suppose you as a customer going to do a business with bank. What type of risk you are going to face? You are going to face, the customer going to face. Now we are going to discuss that, right? Say I am a customer of your bank. As a customer, what type of risk I'm going to face when you're dealing or when you do transaction with your bank? First one, customer face credit risk. Like bank also face, customer also face credit risk. Now say for an example, right? I took a loan from you I took a housing loan from you, right? I took a housing loan from your bank, big amount, right? Now my construction is now going on, right? Now you know the feature of a housing loan. A housing loan are issuing in not all loan amount won't give you at once. They give staggered basis. First you complete your foundation and they give some money, and then you go up to the roof level, they give some money. Likewise, they give in a staggered basis. Suppose now I took a big loan from you, say maybe 10 million for an example, right? So I have done the foundation. So now I'll come to your bank asking my balance loan. Then you are facing some liquidity problem. You are facing liquidity risk. Because you don't have money to oblige my loan, right? So therefore, customers are facing a credit risk due to your liquidity risk. Understood? Because of your liquidity risk, bank customers is facing the credit risk. Why? You are not in a position to get your money correctly because you have to pay for your basunes and all. So they are held up your work, right? So you are facing a credit risk. Understood? Second one, right? and also delay or default on payments by financial institutions due to their liquidity risk or insolvency, right? Sometimes you may have some payments, maybe some interest that is delayed by financial institution due to the liquidity risk faced by them, right? You need to get some payment, right? Suppose you are provided some services to the bank by providing some, say for an example, as a customer, your supplier, you're also one of your customer, right? So you are giving bank, providing some supply material to your bank. So bank is not in a position to pay you because the bank is facing a liquidity risk, right? Okay. Then next one, customers face inconvenience or delays due to operational risk. Now, first one, right. Well, let's look at it. What are the, because of your operational risk, what are the risks faced by the customers? Now, why operational risk coming? Because of lack of internal control. Second, due to people like you, employees problems, or maybe due to some unforeseen activity, or maybe due to some what? Some system failure. Right? Now you go to the bank. So you want to withdraw some money. The bank is closed on a Sunday. Your systems, they have some problem with your system. So customer is facing inconvenience due to operational risk of financial institution. Customers facing inconvenience because of operational risks of your institution. Got the point? Right? Okay. So maybe because of your not provided proper services, or maybe he is not attending to your job. So therefore, because your operational issues, customers facing internal issues, so delays, inconvenience, or maybe another reasons, because of maybe due to some issue, your bank is closed today, right? So therefore, you're not in a position to get the money because of is under flood. Your branch is under flood. The customer face an inconvenience to get some money because you're facing an operational risk. Customer face an inconvenience. Understood? Right. Then we look at it. Risk due to customers' misbehavior. What is the risk going to face by the bank because of customers? Now, earlier we discussed the risk faced by the customer with the bank, right? Now we look at it. What are the risks faced by bank due to customers' misbehavior? First one, again, the credit risk. Why? Customers as credit risk as customer do not pay bank loans and delay payment, right? So customers have taken loans, maybe using their credit cards, may borrow money from the bank. Some customers are not paying their dues at the correct times, or maybe paying late, right? So that risk faced by the customer, by the bank, because of customers' misbehavior, right? Because of customers' misbehavior, right? Liquid risk comes. Why? Liquid risk comes as customers may withdraw money from deposits unexpectedly before the due date. Right? Customers, not maybe their misbehavior. They think this bank is not safe for them. They're going to withdraw the money. So therefore, bank is facing a liquid risk because of customers asking the money. Third one. Operational risk as customers may engage in financial transaction with fraudulent or unlawful manner, with using fraudulent documents. So banks going to face operational risk because of what the customers are, their transaction they are doing with use of fraudulent documents or fraudulent manner or unlawful activity, right? So because of customers' behavior, banks need to face some risk, and because of banks' issues, maybe customers was going to face some risk, right? So we discuss from two angles. One is what are the risks customers going to face because of bank. Other way around, customers' misbehavior face some give rise to some risk of banks, right? So both aspects we discuss how risk of banks and how risk of customer. Okay, I hope you understood up to now. Any questions you need to clarify now? Any questions, please? Right? Any questions you need to clarify? Nothing. So please, if you have anything, just put a chat, right? If you understood, please tell me. I will repeat it again. Okay. So going back again to the subject, right? Okay. Next point. Now, how does the good relationship with the customers promote risk management of financial institutions? Now, what this is talking about, so you don't want to have a whole sort of problem faced by the bank, provided that if you have a better customer relationship, so you don't want risk management at all. Why? So you need to understand the importance of relationship with the customer. We promote the risk management of financial institution. Now let's look at it how we can do that. First, good relationship between financial institution and customer creates what? Confidence and trust each other, and they work together. Both are work in promoting integrity when you do transaction, right? Most problems, most risk arising. Why people try to withdraw the money? Because you are not trust your bank, right? Then unnecessary liquidity issue comes. So if you have a better understanding, better relationship, automatically it creates the confidence, and that risk is going to diminish, right? And if customers are financial institutions behave well each other, both with comply with own obligation and duties in time, so there won't be any issues faced by the bank. Now that is why we have what? Customer charter. Customer charter tells you what are the obligations of bank and what are the obligations of customers, right? So both are obliged or comply with the duties, both banks and customer having a better relationships, there's no any problem. So therefore the good relationship improve or promote risk management of financial institution. Second point. Now you see, so we have identified what are the key risks: credit, liquidity, operational, arise due to non-compliance with such obligation and duties. If customers behave well, they tend to pay loan installment in time and deposit withdrawal in ordinary manner. So they're not going to withdraw money at once. They pay their loan installment. They pay their card at correct time, right? So there won't be any problem. The customer banks not going to follow up with you. You don't. Banks not need to execute parate. Banks no need to call and remind them using unethical practices to debt recovery, right? All dirty things, right? All are create risk. right? So if you have complied all these obligations, so therefore there's no need to have a risk management. So their better relationship will definitely going to succeed the organization, right? And also remember, relationship therefore fundamentally promote risk management in the long term. So that question is asked, how bank customer relationship, right, facilitate, promote the risk management system, right? Because customer and the bank having a better relationship, right, more risk factors can be eliminated, right? Right. That is what the that part is talking about. If you have a better customer relationship, right, you can eliminate, or you can build up a better uh, risk management framework for your bank, right? Okay, right. Now let's look at it. Another important areas, right? Now let's look at it. Now, how do you know? Now, remember, what do you mean by a good bank? If somebody is telling, oh, that bank is good bank. In technically, what do you mean by? Just because that bank is treating you very well? No, no. Right. What do you mean by a good bank? In technically, we say if the bank is maintain or prudently manage their risk, is considered to be a good bank, right? That means you're not having any problem, right? If a bank is managing risk prudently, that means that bank is a good bank. Technically, we call them as what is a good bank? Not because of you're giving high interest rate, not just because of they are providing a better service. No, technically, so good bank is which bank is maintaining or managing their risk prudently, right? Now the questions come: how do you know whether this bank manage prudently their risk? How do you know? What are the indicators, right? Now, say for an example, how do you know your body is running perfectly? You don't have any problem. So you do some checks. Some checks. You take the cholesterol, you check the glucose level, you check the, lot of tests available. Then you tell I don't have any problem. My systems, that means my body is working good, right? Likewise, if most important financial indicators are available to customers to see whether that particular financial institution or a bank manage their risk prudently. So let's look at it, some of these indicators. One is financial indicators. One point, right? Now, first one we look at it, NPL ratio. So what is the NPL ratio? Right? What is NPL? Non-performing loans. Right? Okay. So according to the central bank, I think you're going to learn all these things in another subject. Right? NPL ratio mean, so the loan in arrears or loan is not paid divided by total loan granted into 100. It tells you the percentage of NPL. So if you have the higher NPL, what do you mean by that? Suppose your financial indicators give high NPL ratio. That tells you something. One factor, the bank is not granting loans to the good customers. You are giving for subprime customers, not your prime customers, right? Or maybe your recovery process is weak. You are not properly evaluate the customer. There are many reasons. You are look at it, not C factors. 6 is you are not going to look at it properly, right? Likewise, right? If you don't have a proper internal control system or recovery system, that means your NPL is going. You can check your own NPL with the industry standards. What is the industry NPL? Compare with your one, whether it's increase or decrease. Or otherwise, you can compare NPL last year compared with this year, whether it is increasing, right? So thereby, NPL ratio will tells you, right, whether you are, what is NPL? What NPL due to? Mainly due to credit risk, right? So you look at it with the NPL ratio and see it is low, that means your credit risk is properly managed, right? Okay, first one is NPL ratio. Then you look at it, high liquidity ratio. That means the liquid asset as a percentage of total liability, excluding capital. That means, what is the amount of liquid assets you are going to keep. Now, according to the central bank directions, what is the percentage you need to maintain in your bank? Minimum percentage, that is called from your deposits, 20%. 20% you need to maintain, right? So that means if you have a high liquidity ratio, more than 20%, that means so you are not facing any financial problems. So you have money with you to meet the financial obligation. So that means you have enough money, right? So high liquidity ratio. That is why central bank as a regulator also insist banks you need to maintain minimum liquid ratio of 20%. If you have 30-40%, good. That show your liquid risk is properly managed. Third one. Fourth one, low negative short-term assets, liability, maturity mismatch. Negative mismatch. So important things, no? Right. Now let's try to understand this concept. Now all banks are today, remember, all banks are facing today what you call asset liability maturity mismatch. What do you mean by, what is the role of a bank? As an intermediary, main role of a bank is what? Taking deposits and giving loans to customers and earn a profit of them. Now, banks are giving loans to customers from whose money? The depositors' money. Usually, deposits usually are short term. So, we are taking the short term liabilities and give loans are what? Short term and the long term loans. There's a mismatch, always mismatch, right? Suppose the low negative short term asset liability mismatch, the gap between this is narrow, that means you are managing your risk very well. The liquidity risk again, right? If the is a positive mismatch, the larger the gap, so you are facing high risk, right? Okay, so every banks today are facing this risk, maturity mismatch. We call maturity mismatch. But to what extent you manage by reducing this gap, the most important, right? That is the third one. Fourth one, high capital adequacy ratio. High capital adequacy ratio. So according to the central bank, you need to maintain capital adequacy ratio. Now, I think I told you earlier also to my knowledge, what is the Sri Lankan banks are need to maintain certain capital weighted adequacy ratio, right? That is what you call CAR. The Sri Lankan banks are broadly categorized into two groups, right? Right? I think I have already spoken this one earlier. Two types. One, banks, other are we called domestically significantly important bank. There are two set of banks in Sri Lanka, right? Today's context, right? So all the banks, we have how many banks? We have around how many? 24 banks, no, at the moment, right? So these banks are categorized significantly important banks and significant domestically not significantly important bank. So in Sri Lanka, we have identified 4 banks as domestically significantly important banks, right? And those 4 banks, again, we have categorized into 2 based on the what? High loss absorption capacity, right? We have 2 banks, commercial banks and Bank of Ceylon, under second layer, and the People's Bank and the HNB comes in the first layer in the non-domestic bank. So all high absorption capacity, you need to maintain 14.5 capital adequacy for commercial bank and commercial bank and BOC. And the next category, HNB and People's Bank need to maintain 13.5, whereas all other banks need to maintain the capital adequacy ratio of 12.5. So we have 3 levels, right? But under this corona case, the central bank has given okay to reduce the significantly important bank from 1% and the other banks to 0.5%. Therefore, the present situation, temporary, you need to have a 12%. Other one is 13 and 14. Right. Okay. 13.5 and 13%. Okay. Clear? Right. But usually 14.5, 13.5 and 12.5. Okay. Right. Okay, so that is how capital. Now, if you maintain a high capital adequacy ratio, so that means so you can absorb any risk. So banks not going to insolvent. Can you remember what is the reason for insolvency? Now, if you can remember, we discussed at the early today, we discussed insolvency, the bankruptcy due to erosions of capital due to huge losses leading negative. So we don't have enough capital, so then banks going to face the insolvency. So in order to prevent that only, the central bank as our regulator requested all the banks to maintain adequate capital. Right? If you're high car, that means your bank is managed prudently well. Right. And the 5th one is the ROA, shows the profitability, return on assets. If ROA is a negative, if ROA is high, it reflects high risk ranking. Right? So therefore, higher the ROA, so that means your bank is managing your profit, your assets very well. Right? Without having any risk. So these are some of the indicators, right, you can use to decide which bank you're going to deposit or do some transaction. Right? Okay, so that means remember the risk management that promotes and maintains safety and soundness of financial institution. So the institution who manage the risk properly, right, that means that financial institutions is going to be survive, and who are not managing the risk properly, and they're going to encounter a lot of problems. Right? Clear? Right. Okay, so I think you understood up to now. What we have discussed up to now, we discuss how important the risk management, and we identify certain risks, and then we talk about how to identify a better organization, better bank, things like that. Okay, so now having understood that, now we are going to discuss another important area. We call them as what is meant by financial fraud. Mulya vanchawa කියන්නේ මොකක්ද? Right? Okay, you need to write under that. Okay, before that, I just want to clarify. If you have any questions to raise from me, any questions to find it out, clarify. Nothing, right? Right, nothing there. Okay, so we moving to then to what is meant by financial fraud. Mulya vanchawa කියනු කොහොමද? Right? Please write down under that. What is financial fraud? You can write financial fraud, right? Generally means financial fraud generally means stealing of funds. Stealing of funds. STEALING, stealing of funds. Stealing of funds, bank funds, right? Bank funds, so stealing of funds by engaging ENGAGING, by engaging in unauthorized engaging in unauthorized actions, unauthorized action or duties. Right? I will repeat it again. Financial fraud generally means stealing of funds. First point, stealing of funds. How we are going to do that? Engaging in unauthorized actions or duties. Engaging in unauthorized actions or duties. We call financial fraud. Right? Now you think that is the only financial fraud. Sometimes our accountants also involving in financial fraud. How? Right. Okay. Now what do you mean by your financial fraud? Generally means stealing of funds by engaging in unauthorized actions or duties. Right. So you can write this one also. Showing SHOWING, showing high financial performances. Showing high financial performances. Also of financial fraud. Now see, if you look at it, our financial accountants may show wrong information, the high profits. That is not the real profit, but our accountant may be exaggerate your profit and show to the general public. That also financial fraud. Not only stealing funds, but showing high performance information to the customers, also a financial fraud. අපි තුමු බැංකුවේ accountant ඉන්නවා, account statement එක දාව ඇත්ත profit එක පොඩ්ඩයි, හැබැයි හරි ලොකු profit දානවා. ඇයි අපි එතකොට financial statement පත්තරේ දාවම අපේ බැංකුව හුඟක් ලාභ ලබනවා වගේ බොරුවට පෙන්නනවා investors ලා ගන්න. නැත්නම් share price එක වැඩි කරගෙන. අන්න ඒකත් financial fraud. Right? Not only stealing the funds by unauthorized ways, but also showing high financial performance also comes under financial fraud. Right? Remember both. That technically we call them as, remember, if you want, within bracket you can put showing high performance, you can, there's a technically word we call them as, but Can anybody tell me how you call that? Right? Showing high profits in a financial statement. There's a technical word we are using. Can anybody tell me how you call that financial fraud? Huh? Anybody? No idea. Right. Okay. The answer is for that is we call creative accounting. How you call that? Creative accounting. So remember, creative accounting, nirmaniya ginum karane. That also a financial fraud, right? Okay, remember, right? Showing wrong information, wrong accelerated profits to the customers, also a fraud, right? Financial fraud. Remember that. Okay, now I want to tell you, we are not just keeping silence. I also fed up of teaching. So you need to actively engage with me, right? Then නැතම් බොරුවට හරි මොනවා හරි එකක් chat එකේ එවන්න. Okay? Right? Sure? Then only it's become interactive. Again, I'll keep on telling you, so we are not seeing each other, no? Right? Only you can see me through virtually. So therefore, try to engage much as possible, right? And then only the session become active. Okay, this is a matter. Right? Right. Now let's move in again to the topic. Right? We discuss what is meant by financial fraud. Right? There are so many types of financial frauds. Right? I'm not going to discuss all these things in greater length, but you must be aware of this. You must be knowing Ponzi. Now, you know what you mean by a Ponzi scheme, right? Ponzi mean basically getting a money from another person and give it to another person, that money with a higher interest, right? So a lot of Sri Lankan has initiated this Ponzi scheme. But the Ponzi is not a bad name, right? Ponzi means the Charles Ponzi, the guy who introduced this scheme we call Ponzi, right? His first name is Charles Ponzi. Charles Ponzi. All these frauds I'm not going to touch, but those things we are going to learn under DPF very well. Then rough dealing, right? Misusing of certain funds, breach of internal control, financial fraud, creative accounting, as I told you, poor governance, card frauds, money laundering, mis-selling. Now, mis-selling, of course, without telling the real fact to the customers, you're trying to sell the products to a customer, mis-selling, right? That also, remember, financial frauds, right? So, poor governance, then creative accounting, right? So, showing high figures, high profit figures to customers or maybe interested parties, also financial fraud, right? Okay. Now type of financial fraud very briefly. Right. Now we are going to discuss another important things, internal controls. Right. Now every organization is having internal controls. Can you remember now, because of weak internal control, what is the risk organization, what is the type of risk organization is going to face? Because of poor internal control, what type of risk organization is going to face? Credit risk, market risk, liquid risk, operational risk. Operational risk, right? So therefore, every organization, especially for banks, you must have a internal control systems. Policies and procedures established in your organization to control a particular risk, we call internal controls, right? Why internal controls are there in your organization? To manage or control risk. For that, what organizations have studied? They come up with policies and procedures, right? So in order to prevent internal control, what organizations are established? Policies and procedures. Why the policies and procedures are established? To control risk, right? Otherwise, what happens if you not have a poor internal control system, your organization is going to face grow what type of risk? Operational risk. Right? Now you know what you mean by internal control. Right? What are the objectives of internal control? What are the objectives? Why we have to object? Why we have? So there are three main objectives. One for performance objectives. Third, the information objectives. Third, the compliance objective. To fulfill three types of objectives. So first one is called performance objectives. Now, what do you mean by a performance objective? Right? And the why? Ensure the performance objective, ensure your assets is utilized efficiently and effectively, right? To achieve the performance objectives. So your assets to be utilized, right, efficiently and effectively. And protecting losses, then only your performance increase, right? And so maximum use of your resources. So that is internal control you need to have it. Otherwise, there may be a lot of wastage and so on, right? That is for performance objective. To maximum utilizations of your resources, you need to have internal control. Second, information objective, right? So we as organization take lot of decision based on what? Based on financial and management information. So all these financial informations and management informations are wrong. So you can't take quality decisions. So therefore, you must have an internal control system to ensure that the information you are throwing to your management to take decisions must be quality. So that is the information objectives. So internal control ensure that the information provided to the management to take the quality decisions are properly developed and those are correct, true and correct, right? So then third one, compliance objective. Why internal control have to have the compliance objective? What is compliance? Compliance means basically your organization are compiling or comply the prevailing rules and regulations of your country by the regulator and your civil law, whatever the law your organization is following, right? So otherwise, what is the risk you're going to face? Compliance risk, right? Ensures your internal controls ensure that you are not going to divert or you are not going to break any rules and regulation prevailing in the country or may be imposed by the regulator, right? So therefore, internal controls have three main objectives: performance, information, and compliance, right? I hope you understood on that. Okay, so what are the risks of weak internal control? Now, suppose your organization not have a proper internal control system. What are the things you're going to face? What are the consequences? What are the risks you're going to face? Because if you're not have internal control, one thing, of course, you are going to face the mainly what? Operational risk. What type of operational risk? These are business interruptions. Business interruptions. So you take wrong management decisions because your informations given to you are not maybe inadequate or maybe misleading or wrong. And fraud and theft. If you don't have internal control, employees, customers, management going to play around with your money. So fraud and theft going to increase. And there may be a statutory sanctions coming from our regulator if you are not going to maintain certain internal controls, right? And of course, so misuse of assets if you don't have a better internal control systems, right? So now we discuss now up to now what is internal control, what are the objective of internal controls, and suppose if you don't have the internal control, if your organization, what are the type of risks going to face by your organization? Okay, right. Then we are going to look at it another area. What are the benefits you are going to get it from strong internal control, right? And you can reduce the risk if you have a better internal control systems. So you are preventing errors. If you are going to rectify the error, that means it's extra cost to you, right? So one factor is reducing cost. Second one, and you can address the priority. Which one I give you the priority? What are the important issues we are going to face? And also protecting our employees and resources as well. Ensure that. Providing appropriate checks and balances. So good internal controls mean, so audit has done their job. Right? Remember that. Okay. So these are the some of the benefits you are going to get. Right? Okay. Now we are going to look at it. Some key internal control activities organizations do. One is separations of duties. Separations of duties. Now that is why when you go for an organization, if you go for a little hierarchy, top of the ladder, so the HR department will give you job description. It tells you what to do. Divide the responsibilities between different employees. Now, according to the central bank, remember, every bank must provide job description to every employee. And thereby, separations of duties is an internal control activity. Otherwise, who is going to take the responsibility? Right? Separations of duties. To support that, HR department may issue job description. Right? Some of you are having. Right. And then the second one is what you call authorizations and approvals. Now you are giving authorizations and approval limits. You can authorize up to so much of credit facility. So you are in the counter. Can you give any amount to customers when you come for withdrawal? No. You need to get authorization from your superior. We are going to discuss a little bit on this. How to activate the dormant account and things like that. So your authorization limits and approvals are different levels. Thereby you can, manage internal control to some extent. Authorizations and approval. Right? Third point, documentations. Why we need documentation? I ask documents. Remember, when you are granting a loan, you must support documents. Documents, without having the proper documents, you cannot file action against the customer. So the documentation play an important role, right? So based on the documentations, only you take some legal actions, especially in Sri Lanka for international trade. Banks have not seen the goods. Banks are dealing with documentation. Nothing else. Bank offer issue LCs, but seeing the goods, no. That's a customs to look after what is inside. So banks are dealing with what? Documentation. Banks are grants loan based on what? Documentation. So if you have a better documentation, and they will tell you what are the documents you need. Say for an example, open an account. What do you need? You need documentation. You need to fill KYC, you need to fill mandate. If you open an account for a company, you need to get a resolution. Like that, why we need all these things? For internal control. Otherwise, what happens? Anybody can open, they can make use of your bank to do what? Money laundering. Right? That is why we need documentation. Right? Okay. Fourth one, reconciliations and review. So if you need some time to do where we have gone wrong, right? For reconciliations also, we need internal control. Reconciliations, bank reconciliations, right? That is why you are giving passwords sometimes to see whether who has done this wrong, right? Who has done to identify the person concerned. Right? We need reconciliations. And the last one, security of assets. And so inventory, confidential information. So why we need all these things? For ensure that internal control has to be established in proper way in your bank. So what are the 5 key internal activities a bank can use for internal control purposes? 1, security of assets. Then you can say documentation, reconciliations, then authorizations and separations of duties. Okay, these are the 5 key internal control activities. Right. With this broad framework, so I'm trying to familiar this. So what is meant by internal control in HRA? What are the internal control mechanism in HRA? Human resource management. Do you think only internal control must be there in the operation? No. Remember, the internal control mechanism also established by human resource department, personal department. Can you tell me one in your bank, the internal control mechanism is applied as far as the employees are concerned? That is why you call it HRM, right? So there are internal control system for employees. What are their mechanisms? Can anybody? I have already told you one HR activity, internal controls, segregations of duties. Okay, so let's try to get some answers from you. Right? Are you okay? Okay. Now tell me, what sort of internal control systems adapted by your bank as per the HR department for you? Can anybody tell me? Can anybody tell me one internal control control method used by your bank HR department? I've already told you. One is I give a support for one thing. What? Job description. Job description. One. Second, anybody? Can anybody tell me? Right? Can Chalani can tell me one? If you can't talk, you can just send me a chat. Right? No idea. Anybody? Anybody want to add something? What are the internal control used by your HR department? Especially for operational risk, reduce the operational risk. No idea. I know you know something. One is important thing is your 7-day compulsory annual leave. Now every bank employee, you must be having 14 days, no? But 7 days you need to take. 7 days maybe in cashew, but 7 days you need to take compulsory annual leave. Why? To reduce the operational risk. Right? The first one is job description. Second one is 7-day compulsory annual leave. 7-day compulsory annual leave. Third one. Another one is central banks as a regulator to tell your banks to do this. Control your employees. What is that? That is what you call job rotations. You are not to do a same job. Job rotation. The third one is job rotation. Right? Tell me another one. Job rotation. And also you are now say some of your managers are not keep you the same branch over and over again. No? Right? So branch managers also what? Transferring. So next one, transfers. So this, think of yourself. If you are working in a bank, what are the internal controls adapted by my HR department? Right? These are transfers, job rotation, then 7-day compulsory leave, job description, right? And also you have a disciplinary code. So these are internal control. If you do something wrong, so you can take actions against you under disciplinary code, right? So therefore, so much of things available with you for you to use in internal control in HRA. Okay, clear? Right. Now let's look at it. Some of the things. Right? Briefly explain what is internal control policies. You know what is internal control policies under this. Okay, dormant account procedure. Now this is one of the famous question in March. So dormant account procedure. Now it is an internal control. Now you know the dormant account. That what is dormant mean? The savings or time deposit remain in idle for more than a specific period, maybe 1 year, maybe 2 years, is depend on your bank, right? Now, if you get to know all these accounts are not operating, what some of the employees try to do, get involved in the third party, try to withdraw that money from the bank. But you are the guy who knows this account is not operating for such a long. So therefore, we need to protect these accounts, protect these loans. So therefore, there is a procedure, internal control procedure adapted by your organization. What is the methodology? Now, the moment your account become dormant, one thing is you need to take that particular mandate separately and keep under one of your senior person's authority. Right? Okay? This is done. So suppose if you want to activate the dormant account, right? The customer need to come to you and giving in writing a letter to you, please convert my loan into operative, and you get the senior person's approval, then only it will activate. So if you keep your account for more than 10 years, I told you this account become abundant category. After 10 years, all this dormant account converted to abundant property, right? Okay, so you know what is the procedure. When the customer comes to a bank, the account will be reactivated after getting a letter from your customer. Remember, right? Letter from your customer, right? And it has to be reset by authority. So therefore, every time these systems we call dual control, Now, can you go and open your safe? So two people need to go, no, with the two keys. But sometimes it's used by the one person, but accordingly you need to use two person, right? So thereby protect customers also, customers' money by misuse by the employee. Operational risk again, right? Dual control, right? Okay. Now, again, when you open an account also, so you give two people to sign. When you open the account, give it to another person to sign, and always have a dual control. 4I principle, creator and approval. The person who opened the account, not the approval, right? So there are always two parties, right? Okay, second one. Then you look at the credit management, the segregations of duties in the credit department. Now, say for an example, a customer comes to a bank to get a loan. One person not handle the entire loan. There are different people are handling different parts. So application processing, reviewing the borrower's credit worthiness, setting up credit limits, approving the credits, legal aspect, look at it, are done by different people. Thereby you are controlling credits, right? So those are internal control methods, not one person give entire loan process. There are so many people are involving in the process when you're granting a loan. Different department, different people. Some people go and inspect differently. Legal people will look at the legal documents approved by someone, right? Thereby controlling the segregations of duties in the credit department. As an internal control, can you remember segregations of duties? Yeah, for credit business as well. And then system passwords, another important thing. System password. So every person who are working in the, especially in the counter, you must have a system. You are given a password. Usually password is covered 8 characters. Usually some organization password automatically renewed or maybe automatically lapsed. So you need to get a new password, right? Password ensure your authenticity, right? And that was given by IT department usually. Latter part of that, you can, now if you look at it, every passbook entry, you have some code there. From that, you can track who has done this transaction. So the system passwords will facilitate for you for internal controls, right? That is why you need to give passwords. It has to be changed, right? Likewise, right? System passwords also an internal control system, right? Okay, these are the famous examination questions. And what do you mean by a dual control in that sense? So what do you mean by a dual control? Bank full of dual control. Meanings signing or approval by two authorized officers. Even the check, two people has to sign. If you want to open account, again the two people need to sign. If you open safe in the bank, also you need to go for two people. That's the normal way, but only most of the time you are going alone. But at least to open, you need to have two people. So what is dual control? It helps to detect frauds, errors, non-compliance. Right? Two people are required to complete the specified process. Right? That is what you call dual control. Therefore, the dual control is a better internal control mechanism. A wallet door, very famous one. Right? So dual control facilitate, promote the customer relationship, because why? Bank is not doing any wrong thing. If the bank is not doing any wrong thing, mean automatically build up the customer confidence. Suppose customer comes to the bank and customer get to know is because customer went to America or Australia or wherever. He comes after 2-3 years and asking the money, and he found somebody has taken the money. So what's wrong with that? There are somebody's in the organization involving in that sort of business. Now to prevent that, bank have a lot of internal control mechanism. Dual control is the one of these, right? Okay, now let's look at it. This question. Look at it. This question. The dual control are expected to, right? What may be the answer? Huh? What may be the answer? Dual controls are expected to. What may be the answer? Can you just tell me what the answer? Right, this is your 2016 exam, right? What may be the correct answer? Right, prevent irregularities, divide jobs, promote compliance, control the work of staff. What may be the correct answer? Huh? What may be the correct answer? Any guesses? Right? Can I ask someone? Senani Hettiaraj. What may be the correct answer? Now when I ask your name, he left the class. Right, what will be the answer? Senani, no? Senani, what is the answer, Senani, for question 2016? The dual control are expected to. Any volunteer? Dinusha? Stefani. Dinusha, what's the answer? No. Are you there? Huh? No correct answers? Right. Answer A. Right. A. Right. Samudini also give the correct answer. Okay, at least few are given the answers. Yes, the correct answer is Senani. Not the B. It should be A, right? So prevent irregularities, right? Right. So the dual controls are there to irregularities not to take place in the bank, right? The answer therefore is A, right? Not B. Divide jobs, yes, it's an internal control system, but the question is asking dual control, right? So therefore dual control specifically prevent irregularities. Okay, prevent irregularities. Right. Now let's look at it. Another question similar to this. Right. See whether that question. No. Right. So these are the questions. The last slide. What we have discussed up to financial clients management. Okay, so I'm just summarize again, right? So then we have some time, so we will start another topic next week. But before that, I'll try to touch one question with you, which I gave you in my question paper. We'll discuss one question. So what we have discussed today, just to sum up what we have discussed, we discussed the importance of risk. So every financial institution face different type of risk. The four major financial risks are faced by the banks are credit risk, second one is the liquidity risk, third one operational risk, and the market risk. Right? So we discuss what is operational risk due to employees or people, maybe due to poor internal controls. That is why we discuss importance of internal controls, right? Operational risk, internal controls, then due to system failure, right? Or maybe due to unforeseen. So external factor. As a result, operational risk comes. Then we discuss market risk. Market risk can come from due to interest rate changes, fluctuations, and also they to the exchange rate fluctuation, and due to price fluctuation and stock market fluctuation like that, there may be a market risk. But if you don't have a money to meet your day-to-day obligations, you're facing liquidity. The credit risk is basically you are facing the customers are not paid your loans taken, installment paid, not paying you, the bank is facing. And then we discuss basically the type of products. There are some products you can mitigate risks, insurance, credit slips, insurance covers, and things like that. And then we discuss further what are the risks faced by the customer because of bank's problem. One factor is he took a loan, but he is not going to get the balance loan because bank is facing liquidity issues. Or maybe so the customer's money has taken by the someone when the customer come to collect the money, and that is due to operational risk. Right? So many things. So customers misbehavior also give rise to the risk to be faced by the banks. Right? Not paying their installment properly. Right? Withdraw the money at once. So many things you need to understand. So then we discuss the best thing is best risk management is having a better customer relationship. Right, a lot of risk can be eliminated or to be mitigated because of if you have a better customer relationship. And then we discuss how to identify that particular bank is maintaining or adapting a better risk management framework. So we have some indicators. So that indicators we call them as Npl ratio, then high liquidity ratio, low negative maturity mismatch. Then we have ROA, return on investment, and then we have the capital adequacy ratio and things like that. Give you indication to select the best bank who are maintaining their risk properly. And then we discuss about what is financial fraud. Financial fraud means stealing of funds by engaging in unauthorized actions or duties. And showing high profits also we discuss of financial fraud. And then we discuss different type of financial product. And then we move into the important area is internal controls. What is internal controls? Right? What are the objectives of internal controls? Then we discuss if don't have a better internal control system, what's happened? What are the problems bank is faced? And then we discuss what are the benefits of internal control. And then we discuss greater length, what are the key internal control activities you can implement in the bank. Segregations of duties, documentation, authorization and approval, and reconciliations. And further, we went in to discuss the common internal control mechanism adopted by the bank in Sri Lanka. One is basically for dual control, or activating of dormant account, and then using of wallet, then and HR department. What are the HR department internal control mechanism as far as the employees are concerned? Job description, 7-day compulsory leave, job rotation, transfers, right? And disciplinary code. So those are available for HR people to take actions against the employees if you do wrong thing. And then we discuss what is dormant, some methodology, how to activate the dormant account, why credit management, what is the importance of passwords and things like that. And then finally, we discuss the importance of dual control for basically nothing else, for prevent any irregularities, right? Of course. So that is very simple and very interesting. That's good for your um, uh, DABF as well. Okay, now we have another 20 minutes. So therefore, I've thought of doing one question. Right. If you can get into the question paper which I gave you and think to try to answer the question number 6. Question number 6. Right? Question number 6. In fact, this question number 16 is your 2019 September question. Right? 2006 question number 6 in my question paper. Question number 6 is 2019 September. Right. Please be actively with me. So you get 20 marks for this. Now, read that questions. No, I'm not going to. So next week, I told you, please try to answer yourself question number 2 and 3, and I'm trying to give you answers, right? We try to discuss the answers next week. But today, look at the question number 6, right? And read it. Clients of a financial institution. Now, this is, in fact, I told you, this is 2019 September, right? Clients of a financial institution consist of different types. The characteristics and responsibilities of such clients and products vary from each other. Briefly explain the following based on the product and services currently available in the banking institution. Right. Each part will give 5 marks. First one, 4 main features of current accounts. 4 main features of current account. Simple. Okay, how many of you can get 5 marks? To my knowledge, I think if you put 5 points, you got 5 marks. Got 4, you got 3 marks. Like that. That is how question marks was given. Okay, right? Okay, tell me. Easily you get 5. Now, what is your first mark is 45. Right? If you answer this, you get another 40, right? Okay, simple. 4 main features. 4 main features. Four main features of a current account. Can you tell me or can you write? Anybody volunteer? Try to answer to this question. Right? I will ask from somebody. Don't leave. When I ask a question, he has left the meeting. Right. We'll take the first slide. Naina said, what's your name? Is Najma, Anif. Najma, so give me one main feature of a current account. Any feature, Najma? You can unmute or you can just chat, right? Right? Okay. Very difficult to get voice from you, Romy, right? Okay. How about Mohammed Dilshan? I think you are the guy who come for all lectures, to my knowledge, right? Mohammed Dilshan, what may be the answer? One main feature? Very difficult to get the answers, no? So how can you, if you are in front of me, I know how to get the answer, but you are not in front of me, virtually only, right? Okay, tell me what may be the answer. So there are so many features. One feature is what? First, no interest is paid, for current accounts. First point you can say no interest. Usually no interest. Then what else? No interest, right? Okay, usually no interest not paid normally. Account holder can obtain a checkbook. Yes. Okay, none next interest bear in bank account. Good. Like that is where you have to support with me. Then only good. Join with me and try to answer. Okay, 2 points was given by you all be correct. Checkbook facility, right? Good. Non-interest bearing. And you can obtain what? If you have some problem, if you need some cash for short-term requirement, what are you getting? Right? You are in a position to obtain overdraft facility. Third point. Right? Okay. Then you can say, important thing you forget, no? One is need introduction to open. Need introduction to open an account. Need introduction to open an account. Right? Only operated by commercial banks. No any persons can offer. Only operated by commercial bank. Then sometimes you need minimum balances, right? If you are not conducting your accounts properly, so bank have the rights to give notice and terminate your accounts, right? So likewise, there are so many features for current account, right? 5 marks easily you can earn, right? Okay. So you can say if you didn't, you can do transactions through the checkbooks like that. A checkbook facility, interest not paid normally, needs to be introduction like that. Okay. Second one, 4 type of accounts maintained in relation to the legal state of an entity. Now that question is asking to whom you can open accounts. What type of people you can open account? Right? Very simple. If you are working in a bank, you know to whom you are going to open an account. What type of accounts you are going to open, right? Okay, first one, you can open account for individuals. Simple. You can open account for individual. You can open minor accounts, adults account, non-national account, any account you can open. Individual accounts you can open. Second, you can open joint account. No, you can open joint account. You can open joint account. And you can open account for proprietors. You can open account for partnership. You can open account for corporate accounts, like for private limited companies, public limited companies, like that. Then you can open account for government corporations, government institution. You can open accounts for societies. You can open account for trust. And you can open for corporate societies, right? You name it, you can open for anybody. That's the answer. Now, if you put it that question in a little bit difficult, suppose the next time the examiner asks you, when you're going to open accounts for account for individual, what are the type of information or type of documents you need from that customer? Individual customer. If you want to open an individual card, it is not in your hand, it is not in your exam question. But if I ask you another question top of that, so you're going to open account for all these guys, no, from individual like that up to corporate level. What are the documents you need to open for individual customer? Right? Of course, you need to establishing identity. For that, you need some sort of identity. Okay, so you need to fulfill the mandate, right? You need to follow KYC and CDD, right? And you need to those are the some of the and also documents proving your residence. Right? These are the documents you need to open an account. Suppose a corporate customer comes, company account you need to open. What are the documents you need? You need what? Resolution from the board, authorizations to whom they can operate or sign the checks and things like that, business registration, and all documents you need. And apart from that, you need to fill KYC and CDD forms. right? Now, depend on the, so suppose the society comes to open an account. So you need constitution. They don't have a business license, so you need constitution. So likewise, if the different people comes to open an account, you can provided that, right? You cannot you need some documents to prove for that purpose. Okay, so that's just something comes out of that. The next time they will ask if a company account you need to open, what are the type of documents you need, right? Okay, it is not in this case. Then the third question. So now you saw 4 types of accounts. Now say simple 4 types of account: individual accounts, joint account. Now remember business, government. Now think about your bank. Think about how to whom you are open accounts and write down. That's simple. It's a practical thing, right? So don't get panicked. If you don't know, think about whom you go open the accounts. What type of customers you are coming. So based on that, you can write. Then the third one, type of credit facilities available for SME customers. What is SME? Small, medium enterprise customers. What type of credit facilities you are going to offer to them? Another simple thing, no? Oh, easy. Now this question, I think you can earn almost 20. Right? Now you say 20, if you earn another how many? 25. We have another 4 questions to earn 25. Right? So even you earn 6 marks, so you pass the exam. Right? So don't miss these type of questions, right? So type of credit facilities available for SME, right? You don't want to explain details, right? What is this credit tenor? Simply you say mention the credit facility. That's the examiner asks you. What are the credit facility you're offering to SME? We discuss, right? One, you can offer overdraft facility because they need working capital. That is, think about these moratoriums. Short term, what SME government is expecting to give? Bank loans, good. Bank loans, very good. Somebody given answer bank loans. Overdraft maybe, but 2 types, POD and permanent overdraft and temporary overdraft. Both you can move for overdraft. Then bank loan, as you correctly pointed out. Then what else? Especially for SME guys, we usually give short-term loans, right? We give short-term loans rather than a bank loan. If you can further confine, you can say short-term loans is ideal. What is SME need? Machines, vehicle. What is arrangement you can offer? Leasing facility, financial leasing, hire purchase arrangement. Yeah, but better than a hire purchase is ideal. Ideal to have a leasing, good, right? As a financial leasing facilities, right? So that's a good. Suppose this SME guy exporting certain small items to another country, you can offer them import loans, right? Import loans. So, right. So simply you can put overdraft, short-term loans, import loans, leasings are ideal. Packing credit things ideal, right? Okay. So simple, you see how 5 marks, right? Very easy to get these marks, right? Okay. So then fourth question. 4 methods of services extended by banks to earn interest income from clients. Now, remember here, remember when we are discussing question mean not only answering that particular question, we are answering so many other things. That is importance of answering questions, right? So 4 methods of services extended by banks to earn interest income from clients. Now, banks can earn interest, bank income from two ways. No, one is what? Interest income. Other one, fee-based income. Right? Now, the question is asking interest income. Other one, what is the other income? Fee-based income. Right? Two income, two revenue can be generated by bank from customers. One way in the form of interest, other way form of providing some, getting some fees like commissions like that. Okay, now let's look at it. What are the interest income? The question is asking what is interest income, right? Not the fee-based income. So therefore, don't going to put that into here. So separately, what are the interest income? Interest income to the customers. What? Bank loans. What are you getting? Interest. Overdraft. So you're getting interest income, no? Loans may be housing loans, any loans. Then credit cards, loans, leasing, or whatever you're getting interest income. Right? What are the fee-based income? Tell me one fee-based income. Right? What is the fee-based income banks going to get in? Providing some advices. What else? Currency changing. What else? Utility payments. Right? What else? There are so many things you can write as a income from fee base as well. Right? Then you can say safety lockers facility, providing safety locker facility, but you are getting fee based. Right? Okay. Issuing a checkbook, you get some fee, not interest, right? Some fee. Advisory services, right? You are getting some interest. Okay, interest income from, also you get it from credit cards, both. Yeah, you get a fee base as well as interest income, right? Okay, so you see now how simple we are writing answers, right? Clear? I hope you understood, right? So whether you are okay, the way we did the questions, what we have done, the first question, 5 questions, and next week you try to do question number 2 and 3, or maybe look at to answer question number 6 as well. Now in the question number 6, remember question number 6, we have to change a little bit of supervision of banks. You need to write not covered, right? Supervision of banks not covered, right? The first question, question number 6, you say supervision of banks, but you have to add supervision of banks not covered, right? Supervision of banks not covered, right? Not covered. Okay. Right now, what do you think? What do you feel it? This type of discussion is fruitful for you all, or you need to change the question and answers methods? Any suggestions, please? Then I can add something to you. I can improve. Right? Any suggestions, Fuda? Any suggestions? Any more suggestions? So you are okay? How about Taranga? You okay with that? Taranga, you understood, or you right? No answer, no? How about then we'll ask Abhishnath, no? Abhinash. Abhinash? Right. So very difficult to get the answer, no? Right? Right. Okay. Right. Okay, that's okay. This I got some feedback from you. At least that also encouraging me. Otherwise, I'll also feeling boring. No, right? Okay, right. Thank you very much. So we will see you on next Sunday. So may we come up with some new area. I may come up with. We will discuss the client confidentiality management, right? Another area. So we are covering, right? So don't worry. We have enough time. Is probably the exam we're going to have it somewhere in November, to my knowledge, but it not sure 100% after A level. So therefore we have a time. So we have to do a marketing and we have to do HR, and we are going to start next week the confidentiality management, very short area, right? And with some questions. So in order to get the maximum out of from me, so please try to answer 2 and 3 and see whether uh, whether you uh, whether what you are put as answer is correct or you need to add more to that, right? I will discuss these answers. Okay, so see you for next Sunday. If you have any problems, and keep on telling you, you can call me. And also, my number is not 777-864-202. And just drop me an SMS. I will give you any updates or anything you are not understood, right? Okay, so we'll see you on next Sunday.